Good morning everybody and welcome to this European session on Friday the 20th of September. Hope you are all well. Hope you've had an incredible week in trading the financial markets. It's actually been a really good week. Volatility has picked up very well, which we were highlighting could happen midweek with all the high impact news announcements coming out. We had to exercise a little bit of patience starting off on the week, but some of the key drivers in the market have actually worked out very well. So we've been looking at flows in stock market indices towards the upside, with the S&P and the Dow reaching record highs from the FOMC statement, the Federal Reserve bigger interest rate cut than expected on Wednesday. We've had some great flows in the British pound that we've been highlighting as themes in these webinars over the past several weeks, with the Bank of England expected to keep interest rates on hold. So we've seen some nice strength in those pound pairs on the faster time frames. So it's been a fantastic week so far, and a lot of the market movements have been because of the bigger key economic themes that have been developing in the world. And that is really the sweet spot. If you can find technical setups that are also in line with what is going on in the bigger picture, it's always going to be an absolute game changer to your trading, to your probabilities of your trades as well. So let's get an update on what's been going on in the market overnight and highlight some potential trading opportunities from the London and Sydney trading floors. First up, overnight we had the Bank of Japan deciding to keep interest rates on hold. So the Bank of Japan kept its benchmark interest rate steady at 0.25%. This is actually the highest rate since 2008. The hold was in line with analyst expectations, but a Reuters poll is showing that many analysts believe there will be another interest rate hike at some point this year. The central bank is expecting the country's core inflation rate to rise throughout its fiscal 2025 year, which is why it is happy to steadily increase interest rates. And while other central banks are cutting rates, the Bank of Japan is an outlier, as it has held rates near or below zero for decades. So the way the Bank of Japan have been running the Japanese economy is a bit different to what's been happening elsewhere in the world. So they've kept interest rates low for decades to try to stimulate economic growth. And this is why the carry trade was a very well-known trade actually in the currency market, where for many years people will just simply go to Japan and borrow billions and trillions of Japanese yen, and they were only paying 0.1%, to borrow all that money, so borrowing it very cheaply. But then they would take that money and then they will go and invest it into other countries where they can get a higher interest rate, and they'll pocket the difference between the two interest rates. It's what money market fund managers call interest rate differential strategies, and it has a big impact on the flows of the currency markets. But for the first time since 2008, this year, the Bank of Japan have started to increase interest rates. And this was one of the triggers of why you've seen a huge crash in those yen pairs: Aussie yen, CAD yen, Swiss yen, Euro yen, pound yen, dollar yen, New Zealand yen, which all started off around that July period. We had a huge crash because everyone had been so long on those pairs for many years, and suddenly everything has changed and everyone's now scrambling for the exits, and which is why we had such a big move there. A lot of hedge funds liquidating their short positions, and it was a fantastic time to capitalize on that volatility to the downside. Now, we know since those big moves in July and August, we've had some of those yen pairs, they've gone a little bit sideways, some of them, volatility is a bit lower. We've had some nice trend continuation in things like dollar yen, because the dollar has been very weak as well. We've been talking about that theme quite regularly throughout these webinars as well, so dollar yen has been quite nice as well. But it is going to be a theme to keep an eye out on, okay, if we're going to get some further downside in the yen pairs, because there is another interest rate hike coming. So in this instance, that could lead to a stronger yen, which could lead to some of the yen pairs continuing their downtrend movement. So we'll be looking at clues around that. And what's interesting is we've got a lot of other central banks cutting interest rates, right? We've had the Federal Reserve cut interest rates, we've had the European Central Bank cut interest rates. And so looking at those currencies to weaken and the Japanese yen to strengthen, those yen pairs could be quite interesting to see if we get continuation of those downtrends. Of course, I will do my very best to highlight any potential trading opportunities around them in these webinars, but make sure you're tuning into all the live trading webinars every single day so you too can also identify and capitalize them with the live traders. Okay, so what else has been happening? Well, in case you missed it overnight in the Asia session from yesterday, we had the Bank of England monetary policy statement, and there were no changes in the UK official bank rate, which was as expected. So the Monetary Policy Committee official bank rate votes is really the key data that we want to analyze. Last month it was 0.27. What does that mean? Well, basically the first number means how many members wanted to increase interest rates. The second number is how many wanted to cut interest rates, and the third number is how many wanted to keep interest rates on hold. Okay, so the report from yesterday was actually 0.18. So in this instance, only one of the Bank of England Monetary Policy Committee members wanted to cut interest rates, 8 of them wanted to keep it on hold. Now, with other central banks cutting interest rates like the Federal Reserve, the Bank of Canada, European Central Bank and so on, pairing the pounds to lower interest rate currency pairs could see higher probability trends. And if you have been building your watch list on your fast time frame strategies with the 20 bounces, pip runners, things like that, then you probably would have seen a lot of pound pairs have been on your watch list with pound dollars, pound Swiss, pound CAD, pound yen, all pushing higher, euro pound pushing lower. So again, we've had that nice correlation in the British pound because of course with the Bank of England keeping interest rates on hold, it's actually still forecasted by the end of the year that the UK will have the highest interest rate. So we've got these sort of flows that are developing where, again, a lot of money market fund managers will be, selling maybe some dollars, maybe selling some euros, and then go and park it into the British pound where we can just get a higher rate of return over the short term. This becomes quite interesting, okay, so you can start to see that technically, and that's what I love about trading. These big themes that are developing, even if you don't know about them, if you're actually following the right trading plan, if you're actually doing the right work in analyzing the market would actually give you this information as well. And you can actually see that through your watch lists, all right? Now, Deutsche Bank analysts do see one more rate cut from the Bank of England this year and for next year. So it is another interest rate coming up, an interest rate cut coming up in the UK. So we'll keep an eye out on that and see if there's any potential trading opportunities around that. For now, let's dive into smart charts and see what's going on. Okay, so here we have a chart of the 180 phase changer strategy on the daily chart and on Euro Yen, one of my favorite strategies from Learn Forex, in fact. And on top of what smart charts is finding here, we've also got some other interesting things developing, okay? And really the sweet spot is always going to be trying to use the power of algorithmic technology, AI technology, and use that in combination with some human insight, some human real-time pattern recognition. It's that combination of leading and lagging evidence which becomes very important to identify higher probability trading opportunities with the belief and confidence in the decisions that you're making as well, all right? So on top of what Smart Charts is finding, if you're not too sure what Smart Charts is doing for you, how it can help you for your different strategies, your ideas tab, all the AI tools and algorithmic tools, then again, click on your e-learning portal section of Smart Charts, attend all the live training webinars. We're going through it every single day. We're using it to help us identify trading opportunities, all right? But on top of what Smart Charts is finding, we've got a couple of other interesting things here. So first of all, we've gotten to the moving average zone. So price has pulled back, it's retraced into this moving average zone, and we can see, look, sellers did turn up here off the moving average zone before. So we're at an interesting area first of all where sellers have turned up. So maybe there's a chance sellers might decide to turn up here again. We can also see that we have this interaction point, this support level here, which has broken through and now could potentially act as a bit of a resistance level, because sometimes what you can get from a technical analysis perspective, you can get this support and resistance switchover. previous support levels can also turn into resistance levels in the future, all right? And we also have this angle of price where sellers turned up here, sellers turned up here, and we're sitting on this angle of price here as well. So what do we actually have? We have a confluence of resistance levels all converging around the same area. So it becomes interesting to prepare ourselves if sellers do decide to turn up here again, as they have been turning up around these price areas before, all right? And also what we can see if we zoom out the chart, big picture, so you can see obviously the long-term trends that have developed because of the carry trade that we talked about earlier on, and you can see obviously the massive crash in the yen pairs because of the change in central bank policy. And trends have continued, and we'll be looking for trends to continue, all right? So in this instance, there is space for this to go. You can see that we never got to this low point here, so we could easily just get to this low point first of all. If we break that, we could be testing these lows, testing these lows. So it becomes quite interesting here, okay? So here's a big level of support which could come into play. So there is space for it to go. Now, we wouldn't necessarily target that level so far away just yet, but certainly if the market does go in a direction, then we can start thinking about using trading stop losses, or maybe if you're a master trader, you'll use scaling in strategies and you'll scale into long-term trends and build positions in the bigger trends and themes that are developing. But we've got to go for the first trade first of all, that's highlighted here today in front of us, and then as things develop, you know, we can actually start building positions. So on top of highlighting the potential trading opportunity, Smart Charts also does the most important work, which is risk management. Because if we click the sell icon here, it will populate an entry price at the blue dot, stop loss at the red dot, target the green dots. These can all be adjusted according to your own user preferences, and it also did a risk management work and already automatically recalculates your stake per pip. And that is very important, keeping the risk low, making sure you're able to deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. And then we can also set an expiry. I like to set a current bar close expiry on a daily chart phase changer. And basically what that means is if sellers just don't turn up and continue to move because maybe there's not a lot of momentum in the market, then that's fine. Cancel the pending trade, didn't win, didn't lose, it didn't cost us anything, all right? Because all we can ever do is be prepared. That's what trading is about. Be prepared that, look, if the market moves in this direction, this is where we're ready to capitalize on it. If it doesn't go in that direction, that's fine. We'll look for the next opportunity, all right? And then simply decline or accept the trade here at the bottom, all right? There's also been some interesting things going on some of the dollar pairs. So if we go to the interbank radar strategy, again, another favorite. I mean, actually, all the strategies are my favorites. So if you look at the interbank radar strategy here on the daily chart, we have US dollar against the Canadian, okay? And there's a few things going on here. Now, on top of what Smart Chart is analyzing and what it's using the stochastic oscillator. Stochastic oscillator is a really powerful indicator that can help to identify overbought, oversold conditions, as well as reversal divergences, hidden and continuation divergences. So there's a variety of different uses for the stochastic oscillator. But in this instance, what Smart Chart is helping us identify is that, first of all, look, this currency pair is pretty oversold, okay? And of course, you've got to use that in the right context, okay? So, you know, in this instance, we can see that it is pretty oversold as the market has been coming down, all right? And most importantly, we can see that we've got this fake out here and this liquidity spike where buyers tried to break through it, that previous high point, they failed, and we've got this reversal divergence actually letting us know about this situation as well, okay? So in this instance, when we get that reversal divergence, like here the higher high and here the sort of lower high on the stochastic oscillator, it can lead to sometimes these like bigger moves to the downside. So, you know, the reversal of that is here we have this lower low, but here we have this higher low on the stochastic, and we get these nice moves here, all right? So in this instance, okay, Smart Chart is helping us identify the potential of that kind of move. But there's also, again, some other things going on here that we can also see visibly on the chart as well. And what you may notice is we're coming into this area of resistance, okay? So you can see here, this was a resistance area. Historically, price broke through, then it was finding a support support area here. Actually, during that period of time, we had some really good vol reversal trades actually capitalizing on the bottom of that support level inside that long-term range. But price has broken through it, so now we're looking for clues to see, okay, well, are we going to get a turn here, right, to the downside? So the combination of what's happening with the stochastic, the combination of where we are right now in the market, the context, okay? So the combination of these factors is what becomes very powerful. And we also have a bearish engulfing bar as well, which is bearish type of price pattern as well. So we again have a confluence of factors suggesting that maybe there's a chance sellers could turn up to the market. So we want to be ready and waiting to try to capitalize on that if they do decide to turn up. And this is where smart charts is really going to help, because by clicking the sell icon here, it will populate an entry price of the blue dot, stop us at the red dot, target the green dot, do all your risk and portfolio management calculations, and these can all be adjusted according to your own user preferences, of course. And important to keep that risk low. Make sure you're able to manage and deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. And then I like to set an expiry on this strategy of a current bar close and then decline or accept the trade. All right. Okay, so that's it from me. I'm going to wish you all the best for your trading today, and I'll see you next time.